Uranium Energy Corp, one of only 12 uranium producers in the world. UEC trades on the New York Stock Exchange. They have more than doubled their in-ground uranium resource over the past 2 years. They've also become one of only 6 uranium producers in the United States. Led by Amir Adnani, who has been ranked as one of the top resource CEOs by Casey Research, Amir has attracted major investors like Rick Rule of Sprott Asset Management, Li Ka-shing, the richest man in Asia, and institutions such as Vanguard and BlackRock. Learn more about Uranium Energy Corp at uraniumenergy.com or by calling 866-748-1030. Let's move to the junior resource space. We're at the Cambridge House Investment Conference. The juniors have been doing great this year. I mean, some of the good juniors, at least I would call them good juniors, they're up like 50% in the last month. Is this what a bottom looks like?
Well, we talked, I don't know if you remember this, but the last time you interviewed me, we talked about specifically this. And I said that I thought that we were in a market bifurcation period where the best 20 or 25% of the juniors would start heading up. Not on big volume, but simply because they caught bids.
Yeah.
If you look at the year 2013, the first half of 2013, or at least the first third, looked, if you were to graph it, looked very much like the topographic map of a ski hill. A steeply descending line from the upper left to the lower right. The middle part of the year began to graph like the electrocardiogram of a corpse, flatlined, where the sellers were exhausted and the buyers were exhausted. Beginning in perhaps September or October, the better issuers began to catch bids. Not big bids, but the sellers were exhausted. The downtrend was buyer exhaustion. The flat trend was buyer and seller exhaustion. The uptrend is seller exhaustion. So we're in the market now where I say the market's bifurcated. It's too early for me to say that we've really put in a bottom for 2 reasons. One reason is that the bottom 50 or 60% of the issuers, the true penny dreadfuls, have an intrinsic value of 0. And it would be poetic to see them achieve their intrinsic value in mass. That would be a wonderful thing from my point of view. The second thing is that we have not yet seen issuer capitulation. The last bear market, the 1998 to 2003 bear market, bottomed in July of 2000. And the thing that caused it to bottom was that the better issuers, the Lucas Lundins, the Ross Beatties, the Bob Dickinson said, okay, we get it. We can't survive. What we have to do is raise the money we have to raise, irrespective of dilution to shareholders who came in 3 years ago, and grow our businesses.
Yeah.
When people stop saying, I had a $4 stock, I have a 40-cent stock, I can't raise money because I'm at 40 cents, and they say, if we don't raise money, if we don't grow, we're going to die, that's when a bottom is put in. If we see issuer capitulation in conjunction with bifurcation, then we will be where we were at 2000. And for intelligent stock pickers, the second half of 2000, all of 2001, all of 2002 were the finest times on the planet.
Could this be happening? Could this be bad timing for the juniors or people? Because if the Dow is, let's say the Dow starts to melt down, which maybe we're in a correction or maybe it really is going to melt down. Right. Does that affect a market? Because, I guess the whole time you've been investing, the general market's been in a bull market, but you have the resource cycle. Well, now we might be entering a bear market. Sorry.
Two answers to that question. First of all, stocks are stocks. And if there's a major market decline, which reduces liquidity and reduces the animal spirits, that will be bad for the sector. Let's get that one out of the way.
Yeah.
It seems like with the general market, when it's good, it hurts junior stocks because it sucks capital out of them. When the market's bad, it hurts junior stocks because it sucks capital out of them. I think as an investor, what I have learned that I need to do over 61 years of life and 40 years in the business is worry about what I can control. I can't control the major market, but I can control how I allocate my capital among juniors. You will notice in 2012, which nobody would describe as a generous market, that there were companies like Sirius in Australia that went 12 for 1. Reservoir Capital in this market went 26 cents to $6. Your advertiser, Fission, did well. Africa Oil went from 80 cents to $12. We are not in a market that ignores good performance. We're in a market that's starved for performance. And the reason why this down cycle has been so ugly is because we were so stupid and generous in the up cycle.
Yeah.
As we come out of this cycle, it will be discovery and performance that will lead us out of the cycle, irrespective of what happens with the Dow.
With gold and silver, most people here actually, they buy the physical precious metals. Gold went up in January, and silver just kind of just was stuck. Any thoughts on the silver market and gold market?
Sure. The silver market has historically followed the gold market. Gold is regarded as a safe haven investment, a beta investment. Silver is regarded as a speculative vehicle, an alpha investment. People have come into the gold market this year because they were afraid of stuff. When gold moves and the efficacy of the precious metals trade is available to people, the momentum chasers, the alpha chasers will come back into the market, and they'll bid up silver too.
On the uranium sector, I've talked about this with you every single time. It's still $35 spot. I mean, people just they're buying uranium stocks, but you had the Russian treaty ending, so a lot of people thought that it was going to go up. What are your thoughts on uranium right now?
I think the Russia treaty ending is a non-entity. What it means is that reprocessed uranium will be sold by Russians, not by Americans.
Yeah.
The reactor doesn't care if it's Russian-wrapped uranium or American-wrapped uranium. So I think that's a non-issue. There are two things that you have to think about in uranium, only two. One is that according to Cameco, who should know, the world's largest uranium producer, it costs the industry worldwide on a fully loaded basis $70 a pound to make uranium, including their cost of capital.
Yeah.
So you make the stuff for $70 a pound, you sell it for $35 a pound. You lose $35 a pound, and being miners, you try and make it up on volume. That doesn't work.
Yeah.
Either the price of uranium goes up or the lights go out. In a rich country like the United States, where we have many energy sources, uranium, nuclear power, generates 16 or 17% of the electricity consumed. If the price of uranium does not go up, the lights will go out. Now, which do you think is more likely?
Uranium's going to go up.
That's the first question you have to ask yourself. The second question is this. We had reached equilibrium pricing in uranium at 80 or 85 bucks a pound. And then one event, Fukushima, happened. When Fukushima happened, it took all of the Japanese reactors offline. And taking those reactors offline took 20 or 25 million pounds of annual demand out of a 200 million pound market. Mm-hmm. At the same time that it increased supply, because some of the reactors sold inventory that they had that they weren't going to use generating electricity into the market to generate cash.
Yeah.
I don't know what that number is, but let's assume it was 10 million pounds. So let's assume that you have an imbalanced 200 million pound market where you reduce demand by 25 million pounds and you increase supply by 10 million pounds. A 35 million pound supply-demand imbalance in a 200 million pound market. Normally in markets like that, a 3 or 4% swing in supply or demand can increase or decrease prices by 10 or 15%.
Yeah.
What we need to think about, having answered the question that the price needs to go up to sustain production, is when do we use up that big lump of supply that came into the market as a consequence of Fukushima?
Yeah.
And I don't know the answer to that.
It's interesting because so many people talk about how silver and gold are upside down right now, but uranium is seriously upside down.
Way upside down. So is zinc. Way upside down.
This, in your history of investing, this is pretty much like a guaranteed thing now.
This is a great question, especially for a young person like you to ask, because in the course of my career, when I have confined myself to asking investment questions where the answer begin with when, I have done better than asking myself questions where the answer begins with if. In the gold business, you could say, if this happens, and if this happens, then the gold price goes up. That isn't the question you ask yourself with uranium. It's a when question, because if the question doesn't occur, the lights go out.
Yeah.
When questions make you more certain money over time than if questions. People object to the fact that they have imprecise answers, but in no way, shape, or form is a when answer ever more imprecise than an if answer.
Yeah. Is patience one of the best things that you've learned over time? Because it seems like people got in the gold trade, but they're just not patient.
I think four attributes. Curiosity is extremely important. If you come into this business simply to make money, if you're not fascinated by the business and are not willing to do the esoteric sort of work around the trade, you're going to screw up the trade.
Yeah.
Patience is certainly important. Discipline is really important. Don't do this thing intuitively. Do it empirically. Yeah. It's very important. And then patience. Importantly, Warren Buffett teaches, in many points in time in the market, there's nothing to do. And what you have to discipline yourself to do when there's nothing to do is nothing. Yeah. And nothing is very, very, very hard to do. Nothing is particularly hard to do in bull markets, where all of your recent experience has been success. Bull markets breed aggression.
Yeah.
Aggression breeds overpriced opportunity. And overpriced opportunity isn't opportunity, it's risk. Having the ability to do nothing in a market top, a test, by the way, that I have repeatedly failed, is a very, very, very important test. And then there's that fifth attribute that you need in times like these, aggression.
Your recent experience has been nothing but pain.
My recent experience.
I'm saying in general, people
absolutely.
Here. Yeah.
So part of discipline is the fact that you need to be able to do nothing at market tops, and you need to be able to put the pedal to the metal when everybody else is in retreat.
Great interview. Thank you so much, Rick. I appreciate it.
Always a pleasure. Thank you for great questions.